Started with $1 in a dream. This one for all the people that said I couldn't do it.
Good day, chasers. Thank you so much for making it at lesson 7. And on this lesson, we'll be taking a look at the higher time frame and the lower time frame mixed together. And the topics that would cover is what is multiple time frame, how to select your time frame, and what you should focus on. Thank you so much for making it on to this lesson. And let's take a look at Okay, chasers, now let's look at the first topic, which is what is multiple time frame. Multiple time frame allows you to put down a pair of lenses and zoom in to see what the price is currently doing. And it allows you to put down another pair of lenses to zoom out and see what price is doing in the bigger picture. It's best done on weekend due to being a preparation for the week. Okay, I believe we understood that. Now let's move on to the next topic. And as we go in deeper, we'll understand it much more better. Okay, how to select your time frame? You start up with your weekly time frame. You draw your structure from your weekly time frame. And then you move down to your daily time frame. You identify patterns which are not visible on weekly. You move down to your 4-hour time frame. And then you identify patterns which are not visible on your daily. And last, you move down to your 1 hour. And then you use the 1 hour time frame to trade entry. Use your 1 hour time frame. So these are the time frames that we'll be using to implement the strategy that we'll be dealing on with the last chapters. The weekly, the daily, and the 4 hour, and we execute with the 1 hour. The weekly time frame is the market overview. Where are we overally? And or any important price nearby? Is there any important price areas nearby? That's what we'll be looking for. And our daily time frame, the second big picture. What is the long-term trend? Any important levels ahead? That's what we'll be looking at utilizing the daily one. And with the 4-hour time frame, what is the trade scenario? What do you want to enter? What are the potential profits and good areas for my stop loss? And what is to happen before you enter? The 1 hour time frame is execution, waiting for all trades signal to align. So meaning that, okay, let's take a look at the weekly. Meaning that with the weekly, we start up and we're looking at the overall market, the overview market, meaning that we seek we're seeking where the market, the current price is on support or resistance, and what is the next moves for the coming weeks, so we're able to capitalize on the larger profits. And as we drop down, okay, we're able to, let's say we spotted a bullish overall market. Bullish mean that we're buying for weeks to come. We move down to daily time frame and look at the second big picture, meaning that what is the long-term trend, meaning that if it gets to this kind of support or resistance, is it going to break it, continue to go up, or is it going to rest there? That's what we seek for on daily. We're looking at where it is, where is the nearest point, where is it going to go to the nearest point, and then we move down to our 4-hour time frame. With the 4-hour time frame, we look at what is the trade scenario, where do you want to enter, and what are the potential profits and good areas for my stop loss. Meaning that with the 4-hour time frame, we're able to spot that in weekly, daily, it's going up. With the 4-hour, we want to see where we can enter, where we'll put our stop loss if the trade goes against us, meaning that we're minimizing our loss and we're maximizing our profits, utilizing the 4-hour time frame. And we move down to your 1-hour time frame. That's when we execute our trades, meaning that we draw our patterns on the 1-hour time frame. We wait for our patterns to play out, and once they do give us the signal, we implement we take the buy setup that we saw, and with full confidence, because we know that in the weekly we're going all the way up. Okay, now let's move on to the next one. I believe we understood that. And what you should focus on, Jesus, is that we look for swing point and targets, meaning that if it is a long trade, we'd look for points such as these. Let's say it's a long trade, it goes up, comes back down from what you saw with our higher high and our low, comes back down, goes up, comes back down. We know that this point is support. We're expecting it to drop all the way to here. Then we take the long trade up there. We look for our swing points and target. We know that our target is here. We'll take our swing point. Here's our swing point. We'll enter here. We go up with it. That's what we mean when we say we're looking for swing point and target. And higher time frame bullish, we enter for buys, meaning that if the higher time frame is bullish, we only look for buy setups. Because if the higher time frame is bullish, it doesn't mean that it's going to go up, like just move up like this. We know how the market moves. It moves like this: impulse correction, impulse correction, impulse correction. So we take advantage of these corrections to enter and capitalize on the impulses. And we do, when it's a buy, a bullish trend, we only look for buy setups, meaning that if you take a sell setup on a bullish trend, when the market continues with the bigger time frame to go to the top side, it'll be more likely to hit your stop loss quicker. It'll hit your stop loss quicker. And if you keep on moving your trades to break even, it'll cut up short. It'll always hit break even before hitting your target. The momentum is strong to the upside and not the downside. And capture pips and money flow. Yes, we should focus on capturing pips. We should focus on capturing pips. Target your 100 pips, your 150 or 200 pips, and then the rest, the money will just fall. Like if you just master capturing pips, it's one strategy that I found very useful in my trading career. And when setups don't appear, don't force it. If you're able to spot that it's a buy setup, it's a bullish trend in weekly or daily. Don't try to look for buy setups don't try to look for buy setups in the smaller time frames, like your 1 hour. Let them appear. Let them be able to be seen, if I may say it in that manner. Like, don't force yourself to see a continuation pattern that will continue to the upside. Wait for it to present itself the way you usually trade it. Wait for it to appear the way you usually trade it, the perfect setup, your ideal setup, and then take advantage of that. Meaning you should trade what you are good at. If you're good at taking a certain pattern, trade that only, master it, so you're able to capitalize more on it and become an expert at it. Okay, cheeses. Now let's look at the real-time market on each and everything that we went through on the previous topics. Okay, let's look at this. We've got the Euro US dollar, and we're starting up with the weekly time frame. We've got the symbol is Euro US dollar, and we're starting up with the weekly time frame. So we started up saying that on the weekly time frame, what do? We draw structure. We draw structure. Okay, let's start up. I was fortunately able to spot a pattern here. Okay, we had a resistance zone, seeming like the pair is making lower lows and lower highs. Seeming like the pair is making lower lows and lower highs. Okay, we've got our point like that. You can see the market moved. Okay, let me do this so we're able to see the market moved in lower low and lower high sequences. Okay, we were able to see this. I think it's on lesson 5 when we spoke of support and resistance. Okay, the market moved, created lower low, lower high, lower low. You can see here, lower high. Here it created a low, lower high, lower low. Okay, you can see here we had a lower high, a lower low. Here we came a lower high. There's a lower high to this lower high. So we're expecting what? A lower low, because we know that in downtrend the market does what? It breaks. It keeps on breaking the lows. It keeps on breaking the lows. We're expecting it to break this low, so we can utilize this point as our future target, future weekly target. Okay. So now let's take a look at what the time frame says. We're on weekly, and we're able to spot. Okay. We're able to spot this nice downtrend. Okay, here's our second point. Okay, I believe it makes sense. You can see how it is drawn. So now let's move down to our daily time frame. And with the daily time frame, we're gonna be seeking for points that we can't see at the weekly time frame. With our daily time frame, we'll be identifying patterns that are not visible at our weekly time frame. Okay. Now we're moving down to our daily time frame. Okay, there we've got our daily time frame. Let me just do this so we're able to see it clearly. Okay, we've got our daily time frame here. Same pair, euro, US dollar. We're able to spot that all the way down here. It's coming all the way down. Our target is all the way down. So now let's see what the daily time frame tells us. Okay, we have a support here. We can see that this is a nice support. Our third point. Okay, we found support here. We found support. We found support. We found support here. Okay, I believe you guys were able to spot that. These are our weekly lines, and this is our daily lines. This is our daily lines. Now we know that with weekly, it states that we should come all the way down to somewhere around here. This is our future weekly targets. Future weekly target. So now let's take a look at the pips that would be taking advantage of if we're able to take price from the current market price to our weekly target, to our future week target. Okay, somewhere around here. Let's put it at our lows. Okay, 1,300 pips. Okay, it does make sense. It's worth it. 1,300 pips with the weekly. Okay, now let's drop down to the 4-hour time frame. We drop down to we're able to spot the pattern on the daily time frame. We're able to spot that support line. So now with our 4-hour time frame, okay, let's say let me use this point here. We've got a point here, and we've got a point that's standing right here. Okay, I believe you guys can see why I choose that point. You guys can see why I choose that point. I took this point here because to draw lines or channels, support, any kind of line, you need the previous two standing lines, meaning that I can't just use this first point as my support. I can't just say this support, it's not standing yet, but this is the resistance. I can see it standing resistance. Market came up here, came back down, and this is previous resistance. You can see market dropped, came lower high, created lower lows. You can see this resistance. So now I'm able to take advantage of these points, and gave me this point that I got here. It gave me this point that I got here. So now I've got a trend line that moves like this. Okay, we're able to see that now the market is on. Let me just adjust it a bit. Okay, here's our first point. Our second, it's now the third point right here. Okay, we've got our pattern like this. There we go. There we go. It looks like a wedge. Looks like a wedge. You can see the price came down all the way here. This is our daily support. We shouldn't forget about this critical area here. Daily support. Price came down here, went up, came back down. You can see with this point here, came back up, and now we seeing this point. So now we know that on weekly, it states that we're going down. With the weekly, the potential drop is all the way down. So now we know that if we move down to the 1 hour, and okay, on weekly it's the major move is where it's downward. With the weekly, the major move is downwards. With the daily, it's on support. We found it being on support, and price was correctively moving up. So there's chances of price breaking that specific support to the downside and continuing its momentum, because you can see the major momentum is to the downside. Okay, now we drop down to the 1 hour time frame, and here is where we'll be executing our trades. This will be taking advantage of our trades. Now you can see price came, and price is forming sort of like what we call a rising wedge with the 1 hour time frame. Price is forming a rising wedge, meaning that what a rising wedge means is that a rising wedge, it breaks to the downside. This is a nice sell setup. This is a very nice sell setup. What you can expect from here is that price can possibly come, break this point, correct upwards, and then impulse all the way down and break the daily support, and then it'll continue to go all the way down. This would be a very nice short trade to be involved in. this would be a very nice short trade because you'll be taking off there'll be way more sell setups that will be appearing in this setup here. It'll come all the way down here possibly and then correct, then come all the way down, correct. Like you can't hold that one trade for 1,300 pips if you're not that patient. If you are, you may see what happened here. It dropped for weeks. So now we're expecting such drops, weekly drops. These are major moves, and that's how we utilize the time frame. We start up with the weekly one. We look at the momentum, whether it's a bullish momentum or a bearish momentum. And as we can see here, it's a bearish momentum, meaning that price is going down. Price is going down. Right here, it was on resistance. Couldn't break resistance. It went down impulsively. So now it was resting a bit. We're expecting another drop to the downside. We're able to see that, okay, price is going down with the major time frame. We move down to our daily. We identify all the areas that we couldn't identify utilizing the weekly time frame. Like now we're able to spot that it's on support. We're able to spot that it's on support. So basically what we're doing is that we're hoping for it or we're looking for it. Our ideal setup would be it breaking this support. It can correctively move up, and eventually eventually break the support. Can correctively move up, because what it can do to is that it can move up something like this and then go all the way down to create this head and shoulders. So you can see another pattern being formed here. A left shoulder, a head, and a right shoulder. So it's also possible. But our major move is where it's to the downside. Because we know whenever it goes down, it goes. Because check here, if a person was lost and took buys here, a person took buy trades here, they would have got a few pips. But compared to a person that took a sell trade, check how many pips the person got. The person got a lot of pips. A person could be taking buy trades here, and it will go maybe up until here. They're targeting what, 50 pips or 30 pips or something like that. But now we're targeting 150 pips and above. That's what we're targeting. So we're looking to take advantage of these long-term moves. Once it breaks here, we know for sure we're going all the way down with it up until this area here. This area. And we're able to spot that with our daily. We move down to our 4 hour. And on our 4 hour, we draw the pattern that we can't identify on our daily time frame, which I was able to spot this nice one. You can see it's on the resistance. We can expect a drop here. It's our third touch. Expect a drop here. Go all the way down. And with the 1 hour time frame, because we can't use the weekly time frame to enter, it will mean that we put our stop loss very far. And not most of us are willing to lose such amounts. So now we're able to spot, okay, now with the 1 hour time frame, we drop down from the 4 hour to the 1 hour time frame, and we see what kind of we're able to see that the momentum is bearish, meaning that there's a lot of buy trades. There's a lot of sell trades. Sorry about that. There's a lot of sell trades, and we need to take advantage of them. The momentum is down, so now we're able to spot a flag, and this flag here, we'll deal with it on the next chapters. But in this flag here, it speaks. It represents a downward move. This one represents a nice downward move, and we take advantage of it with full confidence that we're going all the way down. And you can target out of the 1,300 pips, you can target your 300. You wait a week, you target the following week 300 pips, and you can just capture. You don't have to capture the whole 1,300 pips, but then capture 900 pips out of that 1,300, and that's a very great move that will be done. It will show that your strategy is profitable. It will show that the strategy is profitable, because we want to eat with the banks. We want to go where the banks are going. And now we can see that the banks are going downward. Our euro is dropping. And okay, I believe that we saw, and we now understand how the higher time frame works with the lower time frame. How we are able to mix up the two time frames and come up with the with the overall movement of the specific pair that we'll be looking at, and how we take advantage of these pairs that we're looking at. Thank you so much for watching, and we're looking forward to being with you in our next lesson. Thank you, Jesus.